Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com. Welcome to this week's supply and demand, Forex and gold and S&P fundamental and technical analysis for the week ahead starting the 2nd of February. I hope you're all doing well and had a good trading week. And if you like the weekend videos that I provide every weekend, then please don't forget to like, subscribe and share the content with your audience. So, getting into the week ahead, and in the US, the jobs report will take center stage while the ISM PMIs will provide fresh insights into the economy's performance. Traders will also closely monitor Trump's policies, particularly the implementation of a 25% tariff on imports from Canada and Mexico, set to take effect on February the 1st. On the monetary policy front, the Bank of England is likely to lower borrowing costs by 25 basis points. Additionally, global PMIs and the Eurozone inflation, German factory orders, and Canadian employment will also be in focus. And this is from tradingeconomics.com. Now, I'm going to slightly disagree with trading economics, because I think what will take center stage is not the ISM PMIs. I think it's going to be the Trump tariffs, right? And so looking at the dollar index, the equally weighted dollar index, and this week it's all going to be about tariffs. Fundamentals will probably take a little bit of a back seat because ultimately we've had, and this is today, I'm recording this on Sunday the 2nd. It says here, this is the latest update on Bloomberg: complete betrayal. Canada reels as Trump tariffs rattle major trading relationship. And so it says here, Canada braced for economic turmoil and laid out a retaliation plan after President Donald Trump signed an executive order imposing 25% tariffs on almost everything the US imports from the country and 10% on energy. Prime Minister Justin Trudeau, I think that's how you pronounce his name, or Trudeau, sorry, speaking from Parliament Hill on a bitterly cold night in Ottawa, said Trump's move left his government no choice but to respond forcefully. Canada will place 25% counter tariffs on $155 billion worth of, or Canadian dollars, or 107 billion US dollars worth of American made products starting Tuesday. So basically, the Trump tariff war has begun, really. And so, in a scenario like this, the dollar is seen as the currency that will likely to appreciate, whereas other currencies around the world are likely to depreciate, as the US is really in the driving seat when it comes to the negotiations. And so, I expect really the dollar to continue moving higher if there are any. If there aren't any other surprises. Trump's tariffs are seen as inflationary as well. And so if they are inflationary and inflation starts to rise in the US, then the Federal Reserve are also likely, or less likely, to cut rates, which is also fundamentally should appreciate the dollar, right? So for me, path of least resistance is still to the upside. We could see some gaps as well around the Forex market if this is obviously a shock to the market, which I think it should be. And so really, like I said, the path of least resistance should be more to the upside for the dollar. If it does pull back a bit, I do think that ultimately this should really be, there should be more buys for the dollar. So let me just update this demand zone. This is where the new demand zone is. So pullbacks are really kind of dollar buys. Now, of course, there is a scenario where if the trade trade dispute gets sorted quite quickly, then we could see a little bit of a rollover from the dollar, and we could pull back a bit for the dollar. But for now, it's pretty much by the rumor. So the rumor is that there's obviously a trade war coming also as well. You've got Europe, which is also in President Trump's target. So it says here Trump vows tariffs to hit Saturday with more coming in months. And it says here President says substantial tariffs target EU in the works. So again, the rumor really has started that he's going after not only Canada and Mexico, but other countries and regions in the world as well. So if that continues and the longer these negotiations take to play out, then pretty much the dollar will continue to be a buy in my book. So going on to the dollar yen, and so we're seeing that probably play out as well on across all dollar crosses and forex pairs. You're likely to see the dollar move to the upside. So that for me is where again, like I said, the path of these resistances across the board, at least in the short term. I mean, in the short term, you can look, who knows what the short term is. It could be a week, it could be a month. It just depends upon the negotiations. No one's going to really know for certain how long this is going to play out, but uh, just keep reading the articles, news articles, to see what the sentiment really is. But for now, we're at the beginnings of a trade dispute, so the dollar should rise against pretty much all currencies. Now, the Bank of Japan fundamentally is they are hiking rates. So BOJ Ueda voices confidence on rate hike messaging to the market, and this is the Bank of Japan's message on gradual interest rate hikes has been clearly received by financial markets. Governor Kazuo Ueda said, adding that more hikes will take place if its economic outlook is realized. And so yeah, I think the yen should be probably a bit more of a buy than a sell against currencies, based on just the rate hiking cycle, whereas most other banks will be are still in their cutting cycle. So let's see what central banks do across the board in a reaction to these Trump tariffs as well. But it still looks like the Bank of Japan are on target to continue to hike rates as long as the economy is in kind of like the growth cycle. So although I wouldn't necessarily buy the yen against the dollar, I would buy the yen against some other currencies like the euro or the Swiss franc. And in fact, I'm in a Swiss yen trade, and I'll give you an update on that towards the end of the video. So dollar Swiss, again, we're just going to see pretty much dollar strength across the board. We did kind of pop down into this demand zone right here. This actually a level of support and resistance kind of held, spiked down into that area of demand, and then prices moved to the upside. So again, I think ultimately, if you do get a pullback into a level, right, into a zone, then that really should be where you're looking to buy. And in fact, the demand zone really should start from around there. It's a wide area of demand, but ultimately what you want to do is just use areas of support and resistance within that area of demand for extra confluence when you're looking at levels. So if it pulls back and you want to be a buy anywhere around here towards the lows, then I think that's going to be decent for a buy on the dollar Swiss. No reason to buy the Swiss franc because they are quite dovish, talking about intervention. They still see their currency as quite expensive, and so yeah, I think the Swiss franc is still a sell. Dollar CAD, and again, out of the trade dispute, the Canadian dollar is likely to be worse off. So again, more buys. For anyone who's been following for any length of time, I've just been recommending buys on the dollar CAD. It's been a very hard, difficult trade over the past few weeks because there's been a lot of liquidity hunting, a lot of whipsawing as well, in terms of price action on those lower time frames. But ultimately, the dollar should be the currency to buy out of the two. So any pullbacks into a demand zone, which it did get a little one there on that lower time frame. On the lower time frame, I don't think anyone would have really bought this. If you did, well done. But ultimately, looking at this from a higher time frame perspective, you really want to look for maybe a little bit of a deeper pullback into the zone before going higher. And again, just to reiterate, if deal gets sorted very quickly, then we could see actually the dollar start to sell off a little bit. But for now, it does look like Trump is being aggressive with his negotiation tactics. Therefore, the dollar should, appreciate. Pound dollar, so pound dollar, I got into the pound dollar trade around here. So and again, I'll get into an update later on in this video, but this was a really nice trade. You had support, bit of resistance there, and then basically there within that wide area of daily supply. And so fundamentally I'd want to be a buyer of the dollar over the pound. And this week we do have interest rate decisions from the Bank of England, and it's expected that an 8-1 vote in favor of another rate cut next Thursday, though we doubt the Bank of England will drop too many hints on what comes next. We're looking for 3 further cuts later this year, but a shaky jobs market and the prospect of lower services inflation risks pushing the Bank of England into more aggressive moves. And so if they do start to cut more and get aggressive, then I would expect really this to drop at least down and revisit the lows around here. And so that's really where the path of these resistance is at the moment. So yeah, if you do get any kind of pullbacks on this, I do think anywhere around here slightly higher should be more of a sell than a buy. But again, in the short term, I think prices are going to be driven more by the tariff sentiment rather than the actual fundamentals. But once fundamentals start to kick in, then I think the dollar should have the edge over the pound. Pound yen. So pound yen did break through this supply zone last week, but then created another supply zone. This is where the market thought that the pound was expensive and the yen was a bargain. And so now we're seeing this start to play out. And again, if the Bank of England start to get aggressive on cuts, while the Bank of Japan are looking at potentially hiking rates, then I think any pullbacks should be shorting opportunities in going into the future. So, yep. That's really what you're looking for in terms of policy divergence. So there is still the carry trade idea in terms of the difference between the interest rates, and some traders and investors may still want to hold the pound as they have a higher interest rate. But if again the pound and the Bank of England start to get aggressive on cuts, then of course prices should want to move lower. Looking at the euro index, so this is a like the dollar index. This is an equally weighted index which looks at the euro against the dollar, the pound, the yen, the CAD, the Australian dollar, the Swiss franc, and the New Zealand dollar. And so you're starting to see now the euro start to roll over a bit. Also as well, from a fundamental perspective, euro set for deeper decline as market sees more ECB cuts. So currency falls to lowest in nearly 2 weeks on inflation data. Trade tariffs could mean ECB needs to make deeper reductions. And so of course, when it comes to trade tariffs, one of the things to understand is that it can affect the economy, right? And that's the goal of I guess Trump's tariffs is to force countries to negotiate a better trade deal, right, when they're importing and exporting. So but if the tariffs, the effect of the tariffs should really be to also affect GDP, right? Because if countries, can't export, or their exports are going to be affected by increased tariffs, then central banks, although their mandate is to really kind of focus on inflation and getting inflation targets 2%, some central banks have a dual mandate, which is basically to also get employment to a certain level, but also they do assist in helping governments with their their economy, right? And so because the central bank doesn't want the economy to go into a recession, and so if Trump's tariffs on Europe mean that it could hinder or hurt or contract the economy, which it likely will, then central banks will likely lower interest rates to try to support businesses and mortgage owners, etc. And so that's the reason why the trade tariffs could mean the ECB need to make deeper reductions. So it says here traders are ramping up bets for a deeper divergence between European and US interest rates, setting the euro on a clear path for further weakness. The currency fell to its lowest in nearly 2 weeks as soft inflation readings from Germany and France strengthened the argument that the European Central Bank will continue monetary easing this year. Following a rate cut on Thursday, the Federal Reserve kept its rates on hold on Wednesday and hinted at a pause, ensuring the dollar remains a much more attractive currency. So that's the monetary policy divergence. One is cutting rates or continue to cut rates, and the other is looking to hold rates. The question is how deep the euro's decline will turn out to be, with many forecasters betting that parity with the dollar is possible in the coming months. Traders are now fully pricing in 3 more cuts by the ECB by the end of the year and predict there's a roughly 20% chance of a 4th reduction. The central bank may have to go deeper if US President Donald Trump acts on a pledge to impose punitive trade tariffs. So again, they may have to go further, and we find out that they probably will do, right? So again, going back to the euro index, you're starting to see the euro weaken against all the currencies. And if you go to the euro dollar in particular, we're starting to see prices really kind of move to the downside. And as I said, if you're just a technical trader, and I've always said this over the years, if you're just a technical trader, then I mean, that's fine, but you need to know what's going on in the background, and not every single level of demand or supply will hold. It's really the fundamentals that are dictating where value is. And so why, just because there's a demand zone here, why would you look to buy? It doesn't make any sense if you know that, the fundamentals and the risk sentiment side of things is really pointing towards the downside. So, really no real reason to buy there. Of course, prices could still move to the upside, but ultimately, if you're looking at the fundamentals, it was probably still the wrong trade to take. I think you'd want prices to really kind of move to the upside and look for short trades. So yeah, I think the path of these resistance should still be to the downside for the euro dollar, whether it moves to the upside first and then the downside. But on the Sunday open, if of course all those fears are realized, then I'm expecting prices really to continue to move to the downside quite aggressively. Moving on to the euro yen. Again, euro yen should move to the downside. You've got one central bank that is looking to cut rates, and another which is looking to hike rates, plus with some risk of sentiment in the market with Trump tariffs. That should also aid really the yen in terms of any kind of short trades. And so yeah, I think a move back up into this zone should be decent. The higher the better, of course, but I think any short trades starting from there should be decent. In terms of a short trade, euro pound. So the euro not doing too great against the pound. I think the pound has a slight edge, not a great edge, but the Bank of England aren't necessarily as aggressive at the moment. But if they are, Bank of England are aggressive in rate cuts, then we're likely to see probably prices start to auction and range a little bit, right? But this isn't really a pair that I'm too interested in. I do think though that the pound does have a slight edge. So if I was to choose out of the two, any pullbacks up into this area here, I think is a decent area to look for a short, but I'd probably maybe look for a bit more of a stop hunt around this area here, a bit of a CPR trade or a stop hunt above these highs. If you're looking at buying the pound, if you're looking at buying the euro, then you're looking at really if prices come down to this area here, the 0.83 cent area, and then look for buys around there. Looking at the Australian dollar, US dollar, and the Aussie dollar is likely to sell off due to, I guess, as a proxy for China. Trump's trade tariffs will affect China, and therefore, because China is Australia's biggest trade partner, if China are their economy goes into more of the contraction phase, then it's going to affect the Australian dollar and the New Zealand dollar at the same time. So that's the reason why you're seeing prices start to sell off, and this should continue. Of course, depending upon how the trade tariffs develop. If the longer these tariffs go unresolved, is the further we're likely to see a decline in the Australian dollar US dollar currency pair. But if you are looking for a buy trade, then you're looking at this area here, which does look like a really nice buy on the technically anyway, for the Australian dollar. But ultimately, I think the path of least resistance should still be to the downside. Gold is reacting to the fears, the tariff fears. So gold has made new all-time highs. Did bounce off of this previous all-time high back in October last year. Bounced off it, but ultimately we came off of this demand zone and made new highs. So if you are looking at buying gold based on continued tariff fears and risk of sentiment, then basically you're looking at a pullback into that zone right there. Looking for a sell trade at the moment. The only real sell trade I could see happening is a bit of a stop hunt play. So if prices do close back inside this area, then that could be the start of a stop hunt, and then you'd look for short trades. But you would need, I think anyway, you would need the tariffs to kind of be resolved for that to be really a short trade, along with the price action. But path of least resistance at the moment should be really to the upside. So any deep pullbacks should be really more buying opportunities. And then you've got the S&P. S&P again, a really nice stop hunt above the all-time highs. Prices pulled back, and then we've had again this move here, and it's really been driven by the Chinese AI model. I think it's DeepSeek, and but ultimately, I don't think it's going to affect the S&P over the long term. In fact, any pullbacks on the S&P, I would expect really to be buying opportunities, especially if you're more looking at it from an investment perspective. Trading wise, of course, it might be a bit difficult, but ultimately just buys really. I think down at these 83, 80, sorry, 50, 58, 03 level should be really a nice buy. Looking at this from a supply zone perspective, we did have an opportunity this week to look for short trades as we came back, created a supply zone. Prices moved all the way back up. So we created this move here, back up, and then you're looking for some short trades. But yeah, I think the path of least resistance at the moment is probably still more upside. So any moves down to these lows or just lower, I think I'd rather be a buyer than look for sells. But let's see how that works out on the S&P. And now looking at the new trades that I've taken for the week, as well as trade updates. So looking at the pound dollar, and so pound dollar again, I was pretty confident, fairly confident, that the dollar should really have the fundamental edge over the pound. And also as well, I was pretty confident that Donald Trump would be a bit more aggressive on his trade tariffs. And so if that scenario did play out, which it is at the moment, then that would create a risk off scenario, meaning that the dollar should want to move to the downside. So what had happened is that my entry was actually right here. It was right there on the, and the end of that, and the close of that candlestick there. And then what I do is I place some sell pending orders. So placed one there, one there, one there, just in case prices pull back. So prices did pull back, so I managed to get into two trades right there, I didn't get triggered into a third or a fourth position. So once I got into a second position, what I'm looking for is to kind of get to break even as soon as possible. And that's what happened later on that week. So on Tuesdays, I took this on Monday. On Tuesday, ended up reaching a 1-to-1 trade right there. So now I'm only in one position. I'm canceling the sell pending orders there and there. So now I've taken risk out of the market, and now I'm only in this trade, which is right here. So now this becomes a swing trade. Just holding this fundamentally now, and hopefully, again with the tariffs, I've got a lot of potential downside, maybe a 3-4 to 1 before I'll look to take some profit, or maybe I'll just start to trail my stop down and see how far it can run rather than taking profits at these lows. But I've got now time to kind of just manage this trade. So that's where I am. This, at the worst case scenario, this will be a break-even trade. If prices do pull back, right, and stop me out, then I've won one, lost one. It's a break-even trade. But now I'm going to look to trail my stop down, further down, as prices make lower highs and lower lows. So that should lock in some profits. New trade on Brent. Now, I don't really talk about oil at all on the channel, but I do and will trade it occasionally. So here was really the setup, right? There was a demand zone right there. There was also a really nice area of support and resistance where prices had been traded. Now, from a fundamental perspective, I really didn't know, and like I said, I don't follow oil too much, right? In terms of the fundamentals around oil, I know the macros, but in terms of short-term sentiment. Now, the reason why I jumped into this was because I knew that if Trump was going to be aggressive on tariffs, then in fact that would be bullish for oil, right? Oil prices should look to rise, and so I'm just not going to trade an asset class without knowing what is going to drive it from a sentiment or fundamental perspective. And so going down into that lower time frame, I ended up entering or setting a pending order, some pending orders around here. So I ended up getting into two positions as prices pulled back down into this area here, and then I set a third and a fourth position. So end up getting into two positions around here. And then when prices pulled back and triggered me into this position here, this buy pending order, that actually ended up making a 1-to-1. So if you go here, and let me just pull this back. So late on the Friday evening, prices ended up hitting my target of a 1-to-1. You'll see it there. All right, so that was the entry. The prices entered here, and then it hit my profit target right there. So now I've taken profit on one position, and I'm now in just in two positions. Now I'm looking to hold these positions, in fact, and my targets are more around the daily highs. So I assume that we should want to at least hit a few targets. One being 50% of the auction, the range between that high and that low, if this is the low, and then we've got another one right here as well. So let's see what happens. Again, I'm going to be trailing my stops higher behind the swings, and so let's see if we can hit these targets, and if I think that prices could go higher, if these Trump tariffs, are starting to drive prices maybe towards the 89 area around these highs, then I'll just cancel my take profits and try to trail it up and behind swings so that we can kind of reach these highs here. So let's see what impact Donald Trump's tariffs has on Brent. Now, trade update from last week. So this was the Swiss yen. So you can go back last week and look at the setup. And so yeah, I managed to again take profit on a pullback when prices pulled back here. I got into two positions, took profit on that position. So now this is a break-even trade at the bare minimum. In fact, I'm in some profit because I have trailed my stop down to below, I think just above this swing here. So for now, we should again fundamentally see the yen start to strengthen over the Swiss franc. The yen are on their hiking cycle, and are quite, and the Bank of Japan is, quite hawkish, and the Swiss National Bank are quite bearish in terms of talking about intervention to try and weaken their currency, and they're on their currency cutting cycles. So I will assume that prices should continue to move to the downside. This is just a pullback. It's okay for anyone who is in this. Just look to, well, I can't tell you what to do, but for me, I'm looking to hold and see how far this can go. I do have an ultimate target at the moment of 167.70s, but again, that may move depending upon the developments, the fundamental developments between the Swiss franc and the yen. So yeah, that's really where I'm at the moment. So those are my new trades and still my open trades. So let's see what happens on the Sunday Open. That brings us to the end of the video. I hope you all have a great trading week and a safe one. Hopefully you don't get gapped if you are holding a trade over the weekend. Make sure, well, actually it's going to be too late now, but just hope that if it does gap above your stop loss or below your stop loss, that you don't lose too much. If it doesn't and prices are going against your direction on the open, then you may want to just consider getting out, straight away, because obviously the market has made up its mind as to, what the value is. And so let's see, we're going to see a lot of volatility, but take care, guys, and I'll see you all next week.